Good day, everyone, and welcome to today's market fundamental and technical breakdown, hosted by Tony FX, also known as Anthony Phillips Njoku. And I'm a certified professional digital trader with 13 years of experience, currently managing funds for different companies and private investors. I'm also the founder of 10x Digital Lane, where you have the opportunity to learn different digital skills like digital trading, digital real estate, and crypto trading, self-improvement, and the real hustle mindsets you need to make it in our current generation. So this current forecast is for the time period of April 17th to April 22nd. April 17th to April 22nd. So starting with our fundamental breakdown, we have to start with DXY. So DXY represents the strength of dollar. DXY represents the strength of dollar. And if you can look closely, DXY has been trending to the downside. This is a downtrend. Trending to the downside from here. This is a high, a lower high, a lower low, a lower high, lower low, lower high, lower low, lower high, lower low. So I'm expecting to create another lower high, then lower low. Although we can see that market broke this H4 validation point over here, the H4 validation point, and reversed at that support position. The market reversed completely, going to the upside. So it's a H4 validation point and it has fulfilled efficiency. So most traders will expect DXY to have a little push to the upside, correction, and the continuation move to the upside. But my bias is that DXY will move to the upside starting the week into this validation point over here. We also have a H4 validation point that has not fulfilled efficiency. So the market will go there and fulfill its efficiency, and from there we expect it to drop. So I don't expect DXY to start going up massively, which is the dollar start going up massively currently. But I expect DXY to go into this validation point first before it drops. As you can see, my bias for DXY to buy up to daily support and validation point 0.2.5. Oh, sorry, 1.102.5. Then continue the sell drop. So I expect DXY to go up to 102.5. Then from there, we continue the sell drop for DXY. So with that said, let's head to the next pair. One of my favorites, my major pairs I trade most times. Euro USD, Euro USD. So for Euro USD, because I expect DXY to go down, as you can see here, I have this bias written out. I have two bias. Market would push up and a fall. After the fall, I would manage my trades and wait to see a change of structure for buys. If no change of structure, sales continues. So over here, when the market opens up, I think there are some other blocks at these candles. I need to go and fulfill efficiency. So when the market goes up to fulfill that efficiency, I'm not taking that buy as going up, but you can take the sell and we monitor the trade and the structure. That's for Euro USD. So because if dollar is going up as the week starts, we expect Euro USD to be going down, because if you check, dollar is the quote currency of Euro USD. Euro is the base currency. So the quote currency is dollar. So we expect dollar to push the market down. So we'll be expecting the sell, and then there is a support level here, which if market coming up to further efficiency, we can start expecting more buys to the upside. But before I start taking my buys, I'm going to verify very well on DXY if DXY started to drop to the downside, or it's just giving us a little corrective structure and continuing the drop again. So I'm going to be monitoring it very, very well. I'm not just going to blindly take the buys. You understand? to take euro USD to the upside. Why I wouldn't like to take that? Because there is a resistance here. A resistance here that I need euro to break. Which if you can look closely, this is the H4 validation point. If you check to this side, this is the H4 validation point. And market has come and fulfill efficiency. That's come and fulfill efficiency. So this has high chances of being a fake out. This break to the upside has high chances of being a fake out. So this fake out is really what I think it is. It could just what continue going down, expecting you to take buys and expect it to start going more up. But one thing I look forward to is that banks are buying more of euros. They added more positions on their euros, so they are buying more euros. So since the banks are taking more buys, I think I have bias for a buy structure as well for euro USD. But there is a particular position I need the market to get to before I can confirm yes, euro USD is now on a buy wave. You understand? But currently, you can see we have this smooth uptrend flowing, So from here now, we expect market to, as the market opens up, a little correction into the other block, and the sales continue to complete the liquidity for Friday. Then the next major pair I'm focusing on this week is the Australian dollar against the United States dollar. Is another currency I like so much. So for the Australian dollar, you can see that there is a lot of complex moves. There's a lot of complex moves over here. There's a lot of complex moves. And from that, this particular resistance area, the market has not gone above for some time over here. So if I extend this, you see that the market just came there and fulfilled efficiency. Markets fulfilled efficiency. And after it fulfilled this efficiency, it started to drop. It grabbed liquidity there and started to drop. So since I see that there is a very sharp resistance, and this is a daily validation point, the market dropped, came back into this daily validation points, dropped, daily validation point dropped. Over here is now the H4 validation point with efficiency, and it's dropping. For Australian dollar, this can be a very strong, big move. This can be a very big move. And when I say big move, this can be impulsive wave, this can be a corrective wave, and this can be the creation of another impulsive move. Do you see what I say? This can be a start of another impulsive move this way. Because on different time frames, higher time frames, you can see that the Australian dollar started giving a sell structure. But based on what the DXY is currently showing me, I expect this correction to the upside, because I like Australian dollar. It gives very, very smooth, sweep structures, very easy structures to understand, not complex, unlike other pairs. Back to the OB and then drop. I'm taking a drop down into the validation point. There's a validation point here that has not put efficiency for some time. Taking down to this point. And then from here, I'm looking for buy setups. If we don't say buy setups, instead we see a corrective structure and then the continuation of the drop, then you'll be notified. But I'm looking for buy setups at this point, which if you can view closely, you can take this as, you can take this as what? A range. You understand? You can take it as just a range, but we're not going to take that as a range now. We're going to follow the structures based on the reactions of the banks and the validation points and so on and so forth. So the next on our list is gold. Okay, sorry, here's the JPY. And CAD did our move for last week. We didn't get to our corrective structure. So this is for USD JPY for this week. So for USD JPY, I expect a corrective structure to the top side. Then we sell at the bearish validation point. So over here now, there is this is more of an expanding wedge. This market going to this upside, dropping down below and then moving more up. So that's the same thing I'm trying to show you, that We expect dollar to be strong beginning of the week. So they can be what buys here. They can be buys here. So this market has high chances of dropping down to yes into an OB or return to an origin over here and then move up. There is a H4 validation point over here, which market can come and feel that efficiency. If you can look closely, there's a H4 validation point here. When the market comes and feel that efficiency, then we can start looking for our sell setups for the USD JPY, which is just following the structure of the DXY. Then the sell structures, when we see the dollar is now weak, which is going to be taking the market to the downside for USD JPY because JPY is the quote currency this time around and USD is the base currency. So from here, we'll be expecting drops. So for this expanding flat on Japanese, USD Japanese yen, when the market gets to this point, we start looking for our buy setups, which is going to rally the market up to this point, making dollar more stronger. But for now, we're just seeing the correction to the upside and then the drop before we can know the next wave. So for gold, the structure for gold is quite similar for the other pairs. For gold, we expect it to go up to this point, the 2050, but it has not fulfilled that efficiency yet. So if I see any move to the upside on gold, we'll be dropping to the downside, grabbing some liquidity, and then moving more up. So I expect gold to go more up. Why am I expecting gold to go more up? Because gold is more of a safe haven and it is God's money. So whenever there is crisis in some currency pairs, most times investors go to safe havens like gold and stack their money and store value. That's what I see going on. So when the market goes up, you grab some other block liquidity. I'm expecting more drop of gold before they push to the upside again for gold this week. The market is really on a risk mood activated. Risk mood is activated for the market. Risk mood is activated. So most risky assets will be appreciating in value. So I expect the market to get to $85 per barrel and drop this CFD price for oil. It's a combination of different prices from different companies on the actual value of oil, and this is the chart it creates. So last week we told you guys we wanted it to move to this upside, and when it fulfills this efficiency, grab this liquidity and then it will drop. If you can look, this range is a range we drew for a very long time. This range we drew for a very long time. See the top, the bottom. So the market has been ranging here. You see, ranging. It broke to the downside. I told you guys I wanted the market to get to $60 per barrel, but the market never got to that point. No, the market never got to that point. $60, that's the target. It never got to that point. So we expect when it comes into here, it's going to take it as resistance and then start falling more. But no, instead, the market kept moving up, had even a sleep page and kept moving up. So at this point now, commodity like oil is very precious. I expect the market to move more up, starting the week, heading into 85, and then from there we drop. And it's going to be a corrective structure, not really a reversal. It's going to be a corrective structure. And you have to check out the corrective structure. We take it this way. If I expect it towards the 50, and because this slippage needs to be filled, it's not filled yet. So I'm still expecting these sales. So the trade can be the sales. The trade of the week can be the sales to cover up this slippage between 38.20 and 50 Fibonacci level. It needs to be covered up, which has not been covered up for some time. So that's it for oil. Then the next and the last is Bitcoin, cryptocurrency. Okay, the market just fulfilled that order. Well, my overall bias for Bitcoin is on the buy, to be honest with you. On the buy. Although I dropped the signal for a sell yesterday for you guys. Why I dropped that signal? Because I was expecting a corrective structure. If you guys can remember this trade, we were on this session on Sunday, and I was telling you guys buy Bitcoin. Bitcoin was at this point, that moment I told you guys to buy. I gave you guys the second entry, which is also to that second entry, and boom, 30K. So currently my target for Bitcoin, or what I do for Bitcoin, is let's check the next validation point. I marked it out. It's way high. All these are quarter points measured in $500. So the next validation point where I see markets will have some major reaction is at the $40,000 mark. $40,000. So from 30, well, it's very easy for us to get to 40, you know. From 30, very easy for us to get to 40. So what I expected during this week and on Saturday, why I dropped a signal is I expected a correction for Bitcoin. I expected a correction for Bitcoin. So the correction I expected was there are some buyers. There are some buyers that have their orders here at this $28,500 mark. There are some buyers there, and also there are some buyers at the $20,000 mark. So I expected market to correct to the downside. After it corrects, then we'll continue to push to the upside. And overall buy for Bitcoin. It's just the corrective structure for this move, this current move. So if I'm to take this Fibonacci, which I can see the 50% level is close to the 29,500 mark, and then the 62% is exactly on the 29,000. So we can expect a corrective structure down to 29,000. The market just entered into my return to origin on the M, on the M words, on the 10 minutes time frame. Yeah, that's the origin. I expected it to come back to that origin. So it's back into that origin, and you just have to check other factors that will be driving the market to the upside. You don't have to just jump in. You can check fundamental factors and driving the market to that upside currently. So that is it for the structure. Let's go to the fundamentals. You guys are following my social media handle on Facebook. We discussed previously about what controls the market, and one information that controls the market are the fundamentals. The fundamentals. So this fundamental currently has to do with macroeconomies, has to do with the news within the week. So let me sign in on my FX book. This is the platform we use to get our fundamental news in check, high impact news, and follow it during the week. Also, this enables us to connect our accounts. You can be able to connect your trading accounts and track your records, how good you are in the past, and how good you're currently doing. You can see we have accounts without portfolio. We have 4 accounts connected. Let me see. I have 4 accounts connected to this platform, but that is not important. What I want to check out is the economic calendar. Thank you. So on the economic calendar, we have a lot of high impact news starting from April 17th. High impact news. Wait, let me show this. Yeah, April 17th. That's 9 a.m. West African time. That's tomorrow morning, 9 a.m. West African time. This is going to be on Hero. So we have some high impact news on Hero that has chances of moving the market and adding volatility into the market. Then on Tuesday, we have more high impact news on Australian dollar by 2:30 a.m. West African time. Then that's for Asia session. Then in the morning, GBP, we have high impact news on GBP by 7 a.m. and by 10 a.m. Euro. Then we have high impact news by 1:30 on CAD and 1:30 on dollar. That is on Tuesday. On Tuesday, which has high chances of giving the market the sell pressure we need. That was on Tuesday by 1:30 New York session. So the next is on Wednesday, GBP inflation rate year over year, GBP on Wednesday. Then we have that was by 7 a.m. Then by 8 a.m. we have Euro CPI inflation. Then by 10 a.m. we work with Euro CPI inflation. Then in the midnight we have NZD. No, I'm not trading NZD CPI first quarter. So all this news has impact. So on Wednesday we'll be trading live. Based on what I can see, on Wednesday we'll be trading live, but the live session will be hosted in the morning, London session. We'll start the live session exactly by 7:30 a.m. when everybody can join on Wednesday. Since we don't have any high impact news in the afternoon for New York session, we trade live with our community. So you can go down to our on the bio and join our Telegram community. We have a target to grow that community to 1,000 by the end of this year. So just help us join the community. We're trading live with us, and you sign up for our broker, our trusted broker, and you can be able to fund the account, trade live, and make money as we also make money too. Then on Thursday, we have a lot of news on dollar in the afternoon, the New York session by 1:30, and then by 3 as well, West African time. So we can be trading the whole New York session on Thursday. Then lastly, on Friday we have Australian session, Australian news early in the morning by 12 a.m. Then we have GBP news as well early in the morning by 12 a.m. Japanese yen news. So on Friday, I'll be focusing more on USD JPY. Then on Thursday night, like leading into Friday, because Japanese yen, I can see, has a lot of high impact news on that day. Then early in the morning, GBP as well by 7 a.m. Euro itself has news by 8 a.m. The ECB speech. So we can trade London session on Friday. I just want you guys to understand that any day that you're not psychologically fit to trade, don't trade. Do you understand? And any day that you don't understand the structure of the market, don't trade. Don't force any trade because it can really mess up your account that you have tried as much as possible to grow. You understand? So any day you don't understand the structure of the market, it's better you conserve your account, conserve your capital, than try to trade and mess up your account and mess up your capital. Do you understand? And any day that you don't see any opportunity, don't trade. Any day you don't have the good psychology, don't trade. And something else is that don't always forget to add stop loss. Don't forget to add stop loss. Don't ever forget to add stop loss. I want to repeat it. Don't ever forget to add stop loss to your trade. Don't ever forget to apply proper risk management. Don't always forget to apply proper risk management. No matter what, know the amount you're willing to risk on a single trade at a single moment. Know your reward at every single trade. This is very important. I'm telling you the most important thing is psychology. If you're not in a good state of mind, don't trade for that day. Don't be fighting the market. Emotions drive the traders in the market, but it doesn't drive the market. What drives the market is demand and supply together with macroeconomics. Do you understand? So you guys have to be able to focus on what is really driving the market, understand the instinct and direction of the market, and trade according to it. Don't always add to losing positions. You're having a loss in your account, and you think, okay, you want to bounce back. It can be beneficial. It can be beneficial. It has to do with adding volumes. to your account. It all depends on the type of trader you are. If you're an aggressive trader and you understand your strategy very well, good, you can go ahead and do that. But if you want to be a conservative trader, which is very, very preferably the best. Why? Because that's going to give you a steady portfolio growth. You're making income consistently. The goal here can be, for some people, get rich quick scheme. The goal here can be get rich steady, build a steady portfolio, accumulate steady income. It all depends on your mindset as an individual, why you come to this market. Because it's a $6 trillion industry. The opportunity is vast. Preparation, when you miss opportunity, that's what they call success. So I want you guys to know that we have your best interest at heart at Tenet Digital Link. That's why we teach traders how to trade. And we have our package here. We have a free package where you can join for free, gain access to our basic information that has to do with self-development, building your mindset, your wealthy mindset. How you teach you how to, you can be able to invest in assets, proper assets you're meant to invest in. We teach you how you can be able to start a business from zero. You feel like you don't earn any income. We teach you how to start a business from zero. We have these basic, premium, pro, and ultimate pro packages. The basic is for 1 month. The premium is for 3 months. You gain access to all our courses, the Forex course, the real estate course, the crypto course, and our book. You gain access to our textbook. We have a current textbook right now, but you need to pay for the textbook. The textbook is separate from the price of the courses. The textbook is just pennies of dollars for you. So you just need to be able to subscribe for a package, which will be increased by the end of April. It will be increased by the end of April. Our package will be increased. Our new package for basic is going to be $47. This is an update for all of you right now. I want you guys to be aware. The basic package will be $47. And then every other package will be upgraded as well. So I want you guys to take hold of this opportunity to subscribe. Because if you already subscribed, you have already gotten the information and you've already gotten return of your investment. Because this is about 1,000% return of your investment. The information you give you there is what? First class, world-class education, international teachers, mentors, guidance. So what are you waiting for? This could be the choice that is going to transform your financial capacity for this year. So that's the end for our market fundamentals and technical breakdown. Like you all know, my name is Anthony Phillips Njoko. Thank you for joining and have a wonderful and profitable trading week.